Cisco is on a journey to go from hardware to a company that puts the IT in agility. The stock is climbing, but should hungry investors turn to Cisco for their taste of tech?
So far, 2019 has been the year of Cisco. You know I've been a huge believer in this story for a long time. Under the leadership of CEO Chuck Robbins, which has just been completely exemplar, the networking hardware kingpin has increasingly embraced software, especially for security, the cloud, and the Internet of Things. This year, it feels like everyone has become a believer, as the stock has surged up 21% year-to-date, even has pulled back a little bit from its recent highs. Now, tonight, Cisco reported the company delivered a top and bottom line beat, robust guidance for next quarter. Is it enough? Let's check in with Chuck Robbins, the chairman and CEO of Cisco Systems. Special treat here, Kelly Cramer, the chief financial officer. Learn more about the quarter and the company's prospects. Mr. Robbins, Ms. Cramer, welcome back to Mad Money.
Hey, Jim, thanks for having us today. We appreciate it.
All right. Of course. Now, Chuck, even though the world's become a tougher place, I know, since we talked last, I saw a nice reacceleration in business, in orders. Talk about the transformation, because it seems like it's even getting better in terms of software versus hardware.
Well, you know, Jim, we have, obviously, we're very proud of what our team's accomplished this past quarter, and we've been on this journey to increase the percentage of our business that comes from software and even implementing subscriptions on top of our core networking portfolio, which has gone incredibly well. So whether you look at our collaboration portfolio, our security portfolio, or even our core networking portfolio, we have drastically increased the percentage of software in our business. And we've also driven a ton of innovation that obviously our customers are really believing in right now. So we're really pleased with what we've been able to do.
All right, Kelly, I also know that the expense control has been incredible and the gross margins continue to go up. 1% expense growth is pretty amazing. How are you spinning off much more cash than I thought at this point? How are you able to do that?
I think the whole business is focused on driving the bottom line, in addition to driving accretive growth and cash-rich businesses. So everyone's focused on driving, it's why you see the shift to software. It's high margin, falls through to cash, and we're very disciplined around the portfolio management of where we're investing our dollars. So I think the whole business is focused on that, and you're seeing it come out in the cash flow.
She just runs a tight ship, it's bottom line, Jim.
I know she does. That's why I'm glad that she's with us. Kelly, I also saw that you're beginning to see the gross margin gains that come from DRAM coming down. This looks like the first quarter that's really impacted, but I have to believe, given where they are, that's the first of many.
Yeah, no, that's a great point. DRAM did turn around to become a tailwind for us like we expected. And given where the prices are right now, we definitely see this for the next couple quarters really helping and being a tailwind for us. So, yeah, we're excited to start to see that benefit after many quarters of it being such a big headwind.
All right, now, Chuck, I see the Americas up 9, Euro up 5. I see Asia Pacific down 4, and I know some of that's got to be China. I want to put China in perspective. While China may have been weak for you, and I'm going to ask you about that, how much does it really matter to the overall pastiche of what you got going?
Well, I mean, we've talked about it, Jim. China's only about 3% of our business, so obviously we don't want any aspect of our business to be down, but it is a small portion. So the revenue numbers that you just cited were really mostly related to China. As we look at our order run rate for the quarter, we were really pleased with, around the world, our global public sector business was up 10%, our global enterprise business was up 9%, and our global commercial business was up 5%. So the only area of weakness is the same area that we've seen from other competitors and what we've heard about in the press, which was our service provider business. It was down actually double digits in orders this past quarter. But the rest of the portfolio, the rest of our business actually is doing really well.
Will there come a time when we don't have to worry so much about service provider revenue because of the preponderance of subscription revenue that you've got going?
Well, I think
Kelly,
even today when you see the
it's a hard question, I know.
No, the magnitude of the the service provider business being down this quarter, I think on an orders basis, and still our guidance was in line, I think does reflect the transition in the business model and the other aspects of the business. I mean, service provider CapEx last quarter was down across the world almost 20%. So it's obviously a very stressed part of the business. Kelly, any comments?
No, I think you hit right on it.
All right, so Kelly, I know that when I look at the share count, it's drastically reduced. You continue to buy a lot of stock. You bought a lot of stock at the 52 level. How do you do that buyback? Because you did the repatriation, but it seems like you're in there every day. If the stock were to drop to, say, 48, 49, would you be more aggressive?
Yeah, absolutely. I mean, we've been buying back a lot. Now that we got tax reform, we've been aggressively trying to reduce our share count, but we're smart about it. We're opportunistic. When we see the market take dips, the only part that's happy about that for me is I can buy a lot of stock at a lower price. So we try to buy, obviously, at the lowest points. Obviously, there's a lot of momentum behind the stock that's been driving it up over the last 6 months. But, we're smart about it, being opportunistic.
All right, hey, Chuck, if I were to look at your security business, which is now buried within a very large company that is growing much faster than it used to, how big is that security business if I compare to, say, CyberArk, to Palo Alto, to Fortinet? These are all very good companies. Is your business larger than theirs?
Well, Jim, on the call today, we actually said that our enterprise security business, we are the largest cybersecurity provider to enterprises around the world, and obviously growing at 21%, and it has a massive software content, and it's very much subscription based. And I think that the architecture that we put together is resonating with our customers. When you can see threats across the continuum of the modern enterprise, and then actually defend dynamically from the cloud to the endpoint to email to the network, I mean, that's what they're looking for. And in today's world, with the dynamic movement of data and applications, that's what you have to do. And I think the architecture that our teams have built is resonating with our customers.
All right, now, I also just kind of ritualistically have to ask, what happens to you guys? I know, Kelly, I'm sure you've had to cover this with Chuck. What happens under a scenario where there's another $300 billion that gets a bump up to 25% in tariff? The impact on you guys?
Well, yeah, I mean, if that happens, it's every single import, right? So again, the reason we've been able to mitigate the list that we're currently mitigating at the 25% is it's only been a portion of the business. If it goes to all China imports, it's not going to only impact us, but it's going to impact every industry out there. So, we'll adjust. We'll continue, as always, to have a very agile supply chain, and we're moving very quickly, which has allowed us to, again, mitigate the effects so far. But that would have a much bigger impact if it does go to all imports.
Yeah, Jim, I'll tell you, I'm proud of the team because last week, obviously, we got the indication that the tariffs were going to go to 25%. They did on Friday morning. Within 48 hours, our team had executed on everything we needed to execute on to take care of it. So it's behind us, and it's relatively immaterial at this point based on all the work our teams have done, and it's built into our guidance. So great work by the team.
Well, geez, I got to tell you, a lot of people were concerned that maybe there would even be a guide down. Clearly not the case. In a tough world, you guys continue to deliver. Chuck Robbins, CEO of Cisco Systems, and Kelly Cramer, CFO of Cisco Systems. Thank you so much, guys. I'll talk to you soon.
Thanks,
See you,
Jim.
Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.